Good afternoon and welcome to GrainTV. It's April 25th, 2013. To my right is Cody Bills and I'm Brock Shimbino. We had a positive day in Chicago today. Let's turn over to Fire Tip to see how we ended. Corn was up 5 3/4 cents. Soybeans up 19.5. Wheat in Chicago up 9.5, and Kansas City was up 24 3/4, the leader to the upside. You know, Cody, it's kind of surprising to see corn and soybeans, or excuse me, Kansas City wheat and soybeans actually rally here today.
Yeah, absolutely. You know, it was a strong day across the board, and for Kansas City wheat in particular, I think the damage to the crop as a result of those cold temperatures that we've been observing down there, I think that's relatively unknown. I think that has this market a little bit concerned here, and as a result, I think this kind of weighed into to the rally that we saw earlier today. Not only that, but there's also talks that China is going to have to restock some of their reserves, and they may be coming to the U.S. markets to do that when we're talking about wheat. As for soybeans, there's just not as much of a fundamental picture out there that really gives you a lot of reason for this market to continue moving higher. We were up 19.5 cents today for that May contract, and I just look at that and I don't see any fundamental reason why we rallied. What I do see is a technical reason why we rallied. Notice here, this is the July contract, and the reason we're looking at July is because we're rolling out of that May contract. It really didn't have a lot of activity here today. But notice for this July contract, we came right down around the support level of around 1350. That 1350 area obviously provided some support, and we saw some buying off of it. The other interesting thing is if you take a look at the November contract, we came back and we filled this gap that we printed back here in June of last year. I think that was another technical reason why we were able to get a little buying into this market, move a little bit higher here on this Thursday. Brock, you know, I'm skeptical that the soybean market will be able to continue rallying, especially in face of the export sales report that came out this morning. Were there any surprises?
Yeah, really the surprise came in that soybean market like you were talking about. We saw a net reduction of about 206,000 metric tons. If we take a look at this chart here, you can see that reduction for soybeans there. That's actually a marketing year low for this year, a reduction of over 200,000 metric tons. New crop was really nothing to write home about either. We came in below expectations there at 191,000 metric tons. If we take a look at corn, similar story to what we had last week, right within analyst expectations on old crop. New crop really pretty light there, only 21,000 metric tons, well below expectations. And wheat coming in below expectations on old crop and new crop. But as for where we stand for this marketing year, let's take a look at the chart we've been following. The red line is what we need to see for weekly sales to meet the current USDA projections, and this is the corn chart. The blue bar is what we actually did see for export sales this week. So we did fall a little bit below that seasonal pace, but for the year we're still about 26.5 million bushels behind pace to meet current USDA projections. We fell about 1.6 million bushels this week alone. For soybeans, you can take a look at that last bar there. That's those net reductions that we did see this week, obviously falling well below seasonal pace. But currently for the year we're still 89 million bushels ahead of pace, but this week alone we fell another 18 million bushels on that pace, and we continue to fall rather quickly on that pace that we are ahead of.
Yeah, and right now, I mean, take a look at the fundamental stories out there. I mean, we have the Illinois River that's practically shut down because of the flooding going on up there. We have the next shoe to drop really in the Red River Valley. That area is going to be most likely flooding here very significantly, especially as warm weather starts to melt all that snow. So not only do you have it difficult to move beans down the river from those upper parts, but you also have Brazil, which is able to avoid strikes at their docks, and they can continue to export beans from their country and move it onto the global market. The bottom line here, fundamentally, I just don't see this rally continuing a whole lot longer. I mean, we may see some continuation buying or follow-through buying tomorrow, but fundamentally, I just don't see the story there for the bean market to continue rallying.
If you have any questions for us, give us a call at 877-472-4607. As always, follow us on Twitter, @GrainTV is where you can find us, or check us out on Facebook. Green Hedge is where you can find us over there.